Ladies and gentlemen, it is finally happening. The used car market bubble has finally burst. I did a video a couple weeks ago about how this is going to happen, but we've just got some new shocking data, and used car prices have just done the unthinkable, what nobody thought would do, or what nobody thought would happen so soon. So in today's video, we're going to go over exactly what's happening with used car prices, because people, this has been an absolutely crazy mania bubble. Used car prices have been rising 50% year over year. This has been driven by record low inventory, supply shortages, factories being shut down, and record amount of stimulus during 2020 and 2021. But all the ingredients that fueled this used car market bubble is now going into reverse, especially lending with interest rates going so high. So if you've been one of those frustrated buyers for the past 2 years, being unable to negotiate with car dealers, well, dealers are about to be in a world of pain. So everyone, what exactly is happening in the used car market? Where is it going to go? What should we do? Will there be some bargains coming very, very soon? Could you get that dream car you've always wanted? Well, let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Okay, so first things first, look at this. This is the auto debt balance. We can see here since July 2019, it has been absolutely skyrocketing and has just hit a new record, as we can see here, of 1.5 trillion. And with auto loan debt at record highs, right when interest rates are rising rapidly, this is a recipe for disaster. Because look at this, everyone, and this is just the first piece of the puzzle. Auto loan delinquencies on the rise, but consumers continue to place great value on such loans. So while yes, consumers do put a lot of value on their car loan, the mortgage comes first. And what's happening with inflation, this cost of living is rising rapidly. People can't afford to heat their homes. They can barely afford their grocery bill. So they may be forced to sell their cars and downgrade to keep up with the rising cost of living and maybe pay off some of that record credit card debt. Lower inventories, higher prices, and reduced demand, among other factors, are central to some of the changing dynamics in auto finance market, resulting in a rise in auto delinquency rates. A study found that despite an increase in serious auto loan delinquencies, they observed 60 plus days past due and included vintage performance for all auto loans and lease originations by annual and quarterly cohort. A key observation in the study, the numeral or total number of delinquencies is above pandemic lows, but is primarily driven by a backlog of likely delinquencies that were temporarily in accommodation or bolstered by pandemic-related government relief and other stimulus programs. So that is right, everybody. The banks put a lot of repos on hold during the pandemic, kind of like how people didn't have to pay their mortgage either during the pandemic because they didn't want the banking system to collapse. But now that things are coming back to normal again, the banks are coming knocking and they're starting to say, look, it's time to pay up or we're going to take your car. Especially if they're worried that car prices may start falling and start affecting their balance sheets. But look at this here. This is point in time auto loan delinquency rates Q2 2018 to 2022. Now we can see here, 2018 it was 3.2% and now it has reached a recent high of 3.34%. That's for 30 days late. 60 days late is a record as well, from 1.05% to 1.43%, and 90 days late has gone from 0.39% to 0.79%. And while these may not seem like crazy levels yet, people, as inflation, the cost of living crisis gets worse, as people get more and more behind on their bills, it is only going to get worse. And the trend is your friend, and the trend is going higher. Because like I went over in my previous video, car repossessions are surging, and it's a troubling sign for the used car market. But I know what you're wanting to know is, okay, well, are used car prices falling? And people, you may want to sit down because this data may shock you. Look at this. Used car prices record largest year-on-year decline since the global financial crisis. That's right, everybody. Car prices right now are falling more than when they did in 2008. And we're not even in an official recession yet. Guess what's going to happen when we do see mass layoffs come, when we do enter an official recession? And like I've been thinking, I think we're going to be facing a depression. If inflation keeps getting worse, the cost of living keeps getting higher, these people are going to be forced to sell their cars to pay for the bare essentials. I've also spoke to some wholesales and some retailers, and the wholesales are saying at auctions, they're seeing retailers pay less and less at the auctions. There've even been some auctions where there's been no bids at all, and have some friends in auto sales, and they're saying that they're starting to have to use storage lots again because they're not able to move inventory. And I actually went past my dealer yesterday, and they're literally having to park all the cars and take up all the street parking now because there's no more space left on the lots anymore. And this is happening with the RV market as well. So exactly how much are used car prices falling, everyone? Again, this is shocking. So auction giant Manheim found that wholesale used car prices in the first 15 days of October recorded the most significant year-over-year decline of 10.4% since January 2009. And look at this chart here, everyone. This is the .com. This is the GFC. This is the pandemic. And look at this, down 10.4%. This is absolutely crazy, and it's only the first 15 days of the month. Now, I still get a lot of people commenting to say that they're not seeing car prices falling yet. Well, people, this is coming from the wholesale level, so it's only a matter of time before it starts to flow into the retail sector and flow into lower prices in the lots. But what you may not be aware of, say for example, the sticker price may not be dropping, but things are getting a lot more negotiable. Before there was so much low inventory, people couldn't negotiate anything at all. But now I'm sure if you go into a dealer, you could be able to easily get $1,000, $2,000 off and get a lot more perks included. The Manheim Used Vehicle Value Index peaked in January 2022 and continues to slide through the fall, now down more than 15% from the high. And this is not going to be the worst of it, everyone. The Federal Reserve right now is lifting interest rates so rapidly that people haven't really felt the full impact of these higher rates. And guess what? In November, they're going to do another 0.75% rate hike. In December, they'll likely do another 0.5% or another 0.75% rate hike. So we're going to see the federal funds rate over 4%, and we're going to see auto loans, maybe the average rate may turn to 7 or 8%. And all 6 types of vehicles experience year-over-year declines. Luxury cars and SUVs saw the most significant drops in the first 15 days of this month. So look at this chart here, everyone. We can see compact cars down the least, 5.4%. Luxury cars down the most, 13.5%. Mid-sized cars down 10.4%. Pickups down 8.4%. SUVs and CUVs down 12.3%. Vans 6.3%. And the average total, 10.3%. So what's the trend we're seeing here, everyone? We're seeing luxury cars here going down the most and large cars going down the most. And this is most likely from high petrol costs, high gasoline prices. People can't afford to pay these. And, you know, gas prices, I think, next year in 2023 are going to absolutely terrify people because the Biden administration is keeping gas prices lower now by draining their strategic petroleum reserves, but they're getting to very dangerous levels and they're going to have to refill these reserves next year at higher prices. And this means we're going to see gas prices absolutely skyrocket next year in 2023. And so all these people driving these huge trucks and these SUVs, they're most likely probably going to sell these for smaller vehicles that are more fuel efficient. And using bank rate data of the average used auto loan rate inverted on a chart with a year-over-year change in wholesale used vehicle prices clearly shows that the Federal Reserve's most aggressive interest rate hikes in decades are hitting demand, which has led to late year cooling in prices. So we can see here on this chart, the average auto loan is hitting 6.39%. And as I'm recording this right now, the 10-year US Treasury yield has gone over 4.3%. This is a new 14-year high. Now, what you have to know about the car market is just like any other market, and markets all have psychology. When there's low supply and prices are going up so rapidly, people have FOMO and they become illogical. They FOMO into the market, they think prices are going to keep going up forever. They overpay, they pay whatever price. But once prices start to fall a little bit, we have fear of not getting out. Where people say, you know what, maybe prices will be lower 6 months from now, so maybe I'll just wait on the sideline. And that takes demand out of the market. Sellers see prices dropping rapidly. They have fear of not selling their car at the peak, so then they start listing their cars very rapidly, and that makes price declines accelerate faster and faster. So everyone, if you're in the market to buy a car right now, if I was you, I would be waiting on the sidelines because over the next 6 to 12 months, we're going to see some fire sales. And like I think we're going to be facing a depression. People are going to have no choice but to sell these cars to keep up with the rising cost of living. And a lot of these collectible cars, these luxury cars, they will be selling for pennies on the dollar, just like the great financial crisis. But everyone, what are you seeing in your areas? Remember, the car market can be very different from state to state. Some states may have more inventory, states may have less. So what are you seeing? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.